So as many of you know, every single Wednesday we have a interview or we just simply have a conversation with a real life trader. My main objective is to enrich lives, and in doing so, I ask a lot of great questions. Normally I learn something brand new myself. Either it's a question, a struggle, a chart, a company, an idea, a problem, a prospectus, something that's always engaging and exciting for myself and mostly other traders. Other traders love the interviews, so we're going to continue to keep doing them. I don't have anyone scheduled for next week yet, but I'm working on tracking the next interviewee down. I have numerous candidates in mind. All of them are amazing people. So today I want to introduce you to someone named Mr. David Webb down here in Houston, Texas. And you'll be seeing him in the flesh and the real life stock review later today, as me and him did 150 burpees together before market open. So it was pretty intense. So Mr. Webb, tell us a little bit about your background in trading. How'd you get involved in the stock market, man?
Yeah, well, first, thanks for having me, and good afternoon, real life traders. So,
Yeah, man, my pleasure.
How did I get started in the stock market? Well, first off, I got introduced to it when I was about 10 from my grandfather. He didn't look at charts or anything, but he would read the paper every day and, like looking at the stock prices.
Mm-hmm.
So that was my first introduction.
Did he tell you about it, or was he?
He told me a little bit about it. I mean, his strategy was buy and hold pretty much.
Yeah.
And so, and I'll kind of come back to him in a minute. Didn't do anything with that, but, it was definitely interesting learning how he was making his money. And then went off to school and studied accounting. And so during school, I worked for a CPA firm. And during that time, all the tax returns that I prepared, the ones that had money, had either stocks or rental property or both.
Mm-hmm.
So then I was like,
the clients you were looking at?
Exactly.
Exactly. All the rich ones had
all
stocks.
All the rich ones had stocks, rental property or both.
Yep.
And so then I was like, man, the stock, I need to have one or both. Really started, wanting to do something with the stocks. And then got out of school and put some money into the stock market. Unfortunately, I put it in 98, 99, and, right at the top of the tech bubble. So I rode it up and then rode it all the way down. One, I didn't have a clue what I was doing. I basically just put in the money, got a few companies.
Was it a 401k or IRA, or was
it was just a brokerage account.
Do you remember what kind of brokerage company? What brokerage company it was?
At the time, not exactly. A friend told me about one, and it was kind of like an E-Trade. They were just coming online then. But I stuck $5,000 in the market and bought a couple different stocks. One of them was Sun Microsystems. It went up and split multiple times.
Really?
And, it was one of those things. I took the account from 5 to about 20 grand, and it was like, man, this is awesome.
Oh, my goodness.
Wrote it all the way back down.
Yeah.
Honestly, didn't know to get out. I just stayed with it. So at that point, I didn't have any more money to put in the market. So I, just sat there and didn't really do much with it. My grandfather ended up passing away in 2001, and I took over his tax returns and everything. And seeing his portfolio that he left, I realized that he did very well in the stock market. And I was like, okay, I've got to get back into the stock market. It took me years from there to really get back into it with wife and family and everything, and just other priorities. But really in 2012, got introduced, my mother-in-law and her brother decided to do a stock trading seminar.
Mm-hmm.
And, they asked me if I wanted to do it. And so I attended with them. Pretty much all of 12, we went to different, seminars.
Sure.
And then I got back into the market.
All here in Texas?
Correct.
Okay.
They go all over, but we attended them usually in Dallas, or they had some in Houston.
Okay.
So I hit it at that time, full steam ahead. Really 13 started trading.
Mm-hmm.
And, we learned, initially we learned just trading stocks, and then we learned options, buying puts, buying calls. Then we learned spreads. And again, I did very well at the beginning. Took an account up, tripled it, and then, started doing the credit spreads. And I was doing weekly credit spreads with $5 spreads, making pretty good money when they worked. But, I had two go against me really bad, wiped out another account.
Yeah.
And, so over these last, 5 years, I've tried to learn and continue learning. Doing a lot of research on the internet, reading books.
Right.
I felt like there's, 10% of the people you hear are successful trading stocks, and I want to be in that 10%. And I know that if they can do it, that I can do it. And
sure.
So with that, I've just been searching, and I found you. Kind of the end of 2017, I started watching your videos. Took some time to make sure I was comfortable with your style, make sure everything I kind of agreed with how you were doing it. Reached out to have coaching, and
you reached out quick.
January.
Yeah.
At that moment, I knew I'm missing something. I need some help, and I feel like I needed a coach to help me out. So here we are.
I appreciate it, man, too. I remember me and you had a good phone conversation. You were telling me all these different strategies and, like, which one should I focus on? Which one should I, it's hard. That's one of the biggest challenges in the stock market is when you're dealing with, like, a real estate market between the stock market. Real estate market, there are a lot of strategies, but more or less about 5 or 6. You're either flipping or you're doing rentals or you're doing wholesaling. That's pretty much about it, as far as real rental, real estate investment, and maybe you have tax liens or you have hard money lending, but you don't have a massive amount, at least to my knowledge. But in the stock market, you have thousands of strategies, and it's instantaneous. So it's kind of like a bad recipe, and I feel like that's one of the hurdles for a lot of traders is they want to make trading work for them very, very quickly.
Yep.
And they'll kind of rush it, and they'll try too many strategies to find that magic bullet.
Yeah.
Which first strategy that you used did you fully understand, and which one just was it credit spread that just really wrecked it?
Yeah, and I'll say to start with, we learned stock trading, but we jumped into option trading very quickly.
Yeah.
And I was very successful with that. I will tell you, buying puts, they're short, but you can make money in 2 to 5 days in a put. Buy it, and you get the down move, and get out, and it's like, wow. So I was very successful with just calls and puts. Grew the account, and then once I learned the spreads, I had 10 spreads in a row pretty much working. So that continued to build the account, and then also the calls and puts. I mean, I pretty much stuck with those 2 strategies. And then with a full-time job, the credit spread's a little more difficult to exit if you're in them. And, we were doing weekly spreads, so that once they go in the money, it's hard to, it takes some time to come out. And so I would be in meetings, I couldn't get out, and next thing you know, it's down, $2 and a $5 spread in the middle of the spread, and you're just losing money. And so I did that back to back, and those 2 did a pretty good job on the account. And then I had one. This is one of those, hope strategies. Surely it'll work.
Yeah.
I ended up getting in a call, and I was like, I'll just let it ride. It's going to go up. Surely it's going to go up. And I stayed in it, and it continued to go against me.
Yeah.
And so when, you're sitting there just losing money, and it's like, okay. So, a couple bad plays kind of wrecked the account. So
a couple.
Yeah.
Isn't that crazy?
It's crazy.
It is. And that's the challenge is those 4 types of trades you can have, right? The lose small, win small, lose big, and win big. And the only thing that we don't need to do is lose big as traders. But the challenge with that is when you don't lose big, what inevitably happens is you have a bunch of small wins or small losses. And then us as traders will get frustrated, annoyed, and impatient. We'll do something that we're not supposed to do. And then we'll either have a big loss unintentionally, or we'll just start over trading and over complicating it. And we won't focus in and try to find that or hang on to that one big winner, because eventually it's got to come.
Yep.
I mean, mathematically, it has to come. So talking about a big winner, I mean, the other challenge that the weekly options, I've seen so many courses with people pushing weekly options. And as much as I love credit spreads, a weekly credit spread is I would say one of the most dangerous strategies traders can do.
Yep.
For that exact reason. And unless you're there to monitor the spread, if a stock gaps in one direction or another, that's the term getting trapped. If they gap and they unravel or exit too early, you can lose even more than your margin.
Yep.
And that's what most traders will end up doing is the stock will get into their spread. They'll unravel it, right? They'll buy to close their short position. They'll hang on to the long, and the stock will bounce right out of their spread and continue higher.
Exactly. Yep.
The challenge with the weekly also is you don't have that much time, and so people will sell the strategy as, every single week you can get paid 5 to 7%, which is amazing return annually.
Yep.
And as you said, you tripled your account, but it's like I said, that one big loser. So when you do have credit spreads, for those who like credit spreads and for those who are listening to this, make sure you go in and practice on stocks that are every week. Practice stocks that let's say you're looking at the daily chart, and then you figure out, okay, what is the daily chart doing, and then you zoom into the hourly time frame and base your spread off of that hourly chart. And then of course you have your where would I get out, where would I exit, where would I unravel. My biggest advice for sure for those out there who want to do credit spreads and are interested in credit spreads, stick to stock trading first. Understand candles, understand gaps, understand sentiment, understand wave rotation, bounces well before you get into credit spreads. Because once you learn the basics, and you'll get back into spreads at some point, but once you understand the basics of all of that and you get your time frame down, then credit spreads can become a really fun strategy because they are super boring. And in my opinion, you should almost never do a weekly credit spread.
Yeah, no, exactly. And you took the words from me, because I was going to say a piece of advice I would get everybody, because one of the things that I did wrong was I didn't focus on the stock trading.
Mm-hmm.
We jumped into option trading, and I would say until you're profitable stock trading, I wouldn't really focus on option trading.
Yeah.
And then one of the strategies that I learned later, which I think is good for newer traders, is the selling options, as far as selling puts or selling covered calls.
Yes. Yes.
That strategy is the only thing I've found that is consistent over time. And so doing that, if you're comfortable buying stock and then you write a covered call on it, it makes more sense. But jumping in, not knowing what you're doing with options, obviously I had some training, but it was definitely a little bit of gambling there going on. And like you said, staying in front of the computer on those spreads, it shouldn't have been something I was in when I was in all day meetings, and I couldn't watch it. And it was one of those things, the greed, you start making money, it starts going up, and you're like, oh man, this is easy. And it bites you. And I mean, that's the thing, it gets you. I had 10 in a row that it was like, wow, this is great. And then you have one, and then it was back to back bad ones. And it was like, oh, okay. Wiped out the whole thing. So, but yeah, I would definitely say learning the candles, learning the patterns, and I think the part that's appealing with the options is the leverage, and you can buy them so much cheaper than the stock. So that was the appeal, is I'm going to grow the account faster, and you can get a lot of options, since they're smaller priced.
Yep.
And so stock, you look at it and you're like, wow, okay, it's, $300 and, how many shares can I really get?
Sure.
So I would definitely say that's some advice I would give anybody is to, learn the stocks first before they jump into the options.
Oh, for sure. I mean, just at least the basics of just the wave rotation. Something I mentioned a lot recently is timing. Timing is everything in the markets, because you could have the right strategy. So buying calls could be the absolute right strategy, but if you don't buy it at the right time, it won't matter.
Yep.
So timing, since there are thousands of strategies out there, and if you're going bullish, there's even hundreds of strategies you can use for bullish trades. I mean, you could do all forms and variations of debit spreads, credit spreads, diagonals of some kind, ratio spread, back spreads. I mean, there's so many, buying stock with selling puts, synthetic longs. I mean, there's so many, just going bullish, there's so many strategies. And it really does come down to that focus of just getting your timing down.
Mm-hmm.
And most traders, that's one of the things they struggle with, is just, when do I get in?
Right.
When do I get in? So over the last 2 or 3 days, what's helped you the most with that, answering that question? When do you get in?
I mean, definitely the back trading. We've gone through, many hours of back trading, just seeing the patterns, actually going back in time, looking at the candles and everything is definitely helpful. I would recommend that for anybody.
Yeah. So I was going to mention, for those who are listening or watching here live, one of the things to do, and I would highly, highly encourage it, is when you do back trade, take an example like this on Macy's right here. And Macy's, right, you have this white candle gapping up, so retest gap. Go back and back trade that and see that it works, right? You can look at this trade and see that trade works, and then go back to here and trade it day by day. And the trade's going to end up working. So then what we have to figure out is, okay, where would I get in? Which, in my opinion, would be this old resistance, new support. That's where I'm buying my shares. I'm going to place my stop down here. And then go forward. Now, I'm just going to go forward a little bit faster, but go forward kind of candle by candle and figure out, what's the stock doing? What is it thinking? And really burn it into your brain that if you took this exact trade, this that I did right there, you would have had to wait a month before it triggered. And then after it triggered, right, you would have still had to wait. Here it is right there, even today's date. So you go through and you take that trade on a daily chart. And again, I really want this to sink in for a lot of traders. If you take this trade right there and you're in this thing, you get triggered in on the 23rd of March. You were in this trade for 2 months. And there's even an earnings gap right here. So Dave and I were doing some back trading, and we came across a few earnings gaps. And that's where we get to decide the big thing that everyone needs to focus on and understand is time frame. Because time frame is your determination of how long you're going to be in a trade and why. What's your goal? What's your purpose? So in order to hold over earnings, that's going to be something that you're either A, investing in, B, you have a lot of equity in. So what I mean by that is, let's say you took Macy's, just an example. Let's see if I can find one. But anyway, let's just say you got into Macy's down here at $18 a share. And even if you don't want to invest in Macy's long term, but you got in, 6-7 months ago, you're going to hold over this gap more than likely because you have so much positive equity, right? You're up so big on the trade that you're going to hold over that earnings. Same thing with this previous earnings right there. So earnings trades, in order to hold over earnings, it definitely helps when the stock is at a lower price and you got in at a really good equity, or you're holding that trade as an investment. Because you're holding the trade over an investment, you're going to be in that for years. Same note and same simple statistic with that the patience thing. I want to commend David. You're very, very patient. You're trading, and he's super exceptional at getting into a trade and just walking away, letting the trade do its thing, letting the trade play out. What has been a takeaway in your recent tradings for the last 3 or 4 months regarding patience, and what what have you learned about that?
Well, definitely the market definitely tests your patience, tests your emotions. In these last 3 months, it's been so volatile. I've gotten whipsawed in and out of many trades. So as I was telling you earlier, I kind of had to just walk away, during the month of March and, April some, because the trades weren't working that well. You got to be quicker or you got to be willing to sit on them. And so one of the things I had to do was adjust my stop loss and let it play out, knowing that I'm taking on a little more risk, but I'm willing on the time to let it play out.
Right.
So I've had to do that, but it definitely tests your patience. If you're watching it all day and you see the candles move against you, you're like, okay, I've got to get out. And, it's a very humbling experience. I mean, trading in general, it's, you think you know it, and you think it looks so easy, and it's just like, man, as soon as you think it's right, it goes against you. And, so it's very humbling. So,
man, why do people still do it? This industry is so hard. Why do people, why do traders get drawn to this thing, man? Or why do people get drawn to it?
I mean, I would say the financial freedom and the freedom with your time. If you can do it, as a lot of y'all with, day trading and all that, you've got freedom of your time. But I would say financial freedom, and I think it is the appeal of, it's easy. You put in money and, you make a lot of money. But it requires a lot of work. And that's one thing I went into is thinking it was easy. And you've got to really work at it to do, well. You've got to, read books. You've got to study. You've got to do the back trading to really be successful. And it's with anything, I think it's that whole get rich quick scheme.
Right.
Okay, we'll go throw in some money and, double it or triple it.
Right.
And it's easy. Hit the home run, and sometimes that happens. But anything to be good and successful takes time. And the market, I think the appeal is that you can do it anywhere, and it doesn't require a boss. It doesn't require anything, but it is a lot of work. And I think people just don't realize how much work it is.
No, I mean, I think you're 100% right. I think that's in a lot of. Being a CPA, are you still a CPA now?
Yeah, no, I'm still a CPA.
Is it easy?
Oh, no. I mean, I don't use it. I work for a public company, so I still keep up with my continuing education. But no, it was not easy to get it. You got to keep up the continuing education.
You have to learn new things
if you're, especially like if you're in tax, you got to read up on the new laws and regulations.
You have to, right?
Oh yeah. I mean,
you're going to lose your job if you don't do that.
Yeah. All the GAAP and FASB standards that are out there, you got to stay up on them and everything. So
it's any sector, man. It's any career. It's any profession, guys. It's hard. Success is hard. Making money is a challenge. It's so much growth, and it's so much uncomfort and discomfort, and that's the only place that we grow is in those times of uncomfort.
Yeah, definitely.
What's so tell us some of the positives. What's some of the good stock picks or some good trades that you have had over the last few weeks, months, years?
I mean, my number one trade right now is NVIDIA, and that one, I did it as a longer term position, and I bought it, I had some education, but I bought it at 60, and then I sold it at 100, and then I got back in at 120, and I've been holding ever since. And so it's done very well. I've been holding it for about a little over a year now, and when I got into it, I researched it. I liked what they were doing with the gaming, with the autonomous driving, the artificial intelligence, everything that I was reading. It was like, these are the areas that, are growing. So I got into it with kind of the mindset of I'm sticking with this for, at least a year was kind of my thought.
Interesting.
And it's worked out well. I mean, done very well for me. So
interesting. So when you mentioned you were researching the company, what did that look like? Like, what websites did you go? What did you read? Who did you talk to? How did you research it?
Mainly with Google, and right now, I just typed in NVIDIA and went to their website, read about them.
Okay.
IBD had some articles about NVIDIA. I read those. So,
did it resonate with you? Like, did you understand what those articles were talking about? Did you got it?
Oh, definitely. Yeah.
Okay.
I mean, I work for a public company, and so I'm working a lot with the 10Ks, 10Qs. Reading
man,
that research.
So you're a CPA, man.
Yeah,
you should be able to go through 10Ks like butter.
Yeah. So I'm used to reading through those and everything. But like I said, what appealed to me with NVIDIA was just the market they were in. I mean, I felt like they were the leaders in some top markets. And
so I have a question for you. I'm going to put you on the spot. I'm sorry.
Okay.
Do you think you got to write an article for Real Life Trading to help other people know what to look for in a 10K and how to read it? Are you allowed to? If you can't, we'll find out.
Yeah, I'd have to look into it. But yeah, I'm definitely willing to, give some tips and everything on what they could look at.
Yeah, because I think we were talking about this, and you're mentioning when you go long term on something. Here's something that I want to make sure a lot of traders know as well, because me and you've been having some great discussions the last few days. That's why I wanted to have this interview. The best way to make a lot of money. So that's what most traders want to do. Most traders, when they're investing in the stock market, they want to make a lot of money. There is one way to make a lot of money, quote unquote, quickly. And that is by finding one good company or one or two good companies, researching it like a mad person, looking at the chart and making sure it's a good price to get in. And then when you get in heavy. You mitigate your risk, so that if you're wrong or if it starts going down, so you give yourself that time frame. But that's some of the points that when I was asking David about his big win on NVIDIA, I was like, okay, so what did you do exactly? And he goes through, okay, I was researching it, and I came up with a predetermined amount of time I'm going to be in this particular trade, and you got in big. I mean, that's how you're going to win, and you're going to make a lot of money. You're not going to make a lot of money if you have $1,000 on a trade. You could be the smartest person in the world and pick a great company, put $1,000 in there. You're going to have to hold 20 years to make money. But if you do have, even unless you have a $5,000 account and you research and you spend a lot of time on a really good company, it helps for sure if it's newer and cheaper, because that way, if you have a $5,000 or $10,000 account, it's going to massively help as the newer and cheaper company. But do a lot of research. And so when you're talking about the 10Ks and the websites and reading the articles, make sure you understand how it is that they make money and what they do.
Yep.
And then, put in some money. How often have you checked either the P&L or the position on that particular trade?
Now that I'm in it, I have not checked the P&L. I do read the earnings reports when they come out.
Okay.
But, now that I'm in it, I definitely
not once. You haven't pulled up the P&L one time.
No, I pay attention to the earnings reports for sure.
Mm-hmm.
I want to make sure they're still growing their sales, their earnings quarter over quarter.
Yeah.
So that is something I'm paying attention to. But no, as far as the additional research, I feel like it's still solid. The fundamentals haven't really changed. And that is one thing for me that on this one I was able to not pay attention to the dips as much. It was like, okay, I'm going to do this.
Yeah.
And there's times where once it started getting extended, where now it's like, do I get out? It's pulling back some. How far is it pulling back?
That tests your patience.
And that does. So now I feel like I've watched it more. This year, because it got to this 252 range and it keeps bouncing down. And so I'm watching, but it's mainly I'm going to watch it for a trend change. If I see some major adjustment and, but I'm in at, so low that I feel like I got profit and I can
hold on to it. Yeah. And since it pays dividends, it helps.
And I will say, I'll have to give you credit that you opened my eyes talking about this is, Yeah, obviously now looking back, I wish I'd have gone in more
Sure.
than what I did. But knowing, the risk level, taking that big gamble like you were asking me, would I put in 100,000? Well, now knowing the skills, I mean, yeah, I would do it.
Yeah.
I mean, in a
Any
heartbeat.
amount of money.
Yeah.
Just have your risk in place.
Exactly.
Yeah.
So, I mean, yeah, if I would have done that, it would have been a nice full return right now.
Yeah,
so
for sure.
Quite put in 100,000, but
for sure.
But yeah, I'm confident in a longer term play doing that.
Yeah, and so that's the good news is there will be plenty of other opportunities. There's I often get experiencing myself the fear of missing out when you see a Bitcoin or an Amazon or whatever, and you're like, oh my gosh, these things have gone up so high. Or a Ferrari. That's the one I keep kicking myself on. Ferrari, GoDaddy. So, I mean, GoDaddy was a no-brainer for me. I cannot believe I didn't put in a lot of shares into this. And, I mean, because I know how they make money. I use the company. I mean, David, look at this pattern, man. I mean, this is an obvious distribution phase. It breaks out, it retests, breaks out, retests again. I have like 3 full months to get in. I just never got into that trade. So that's the thing. Again, for traders out there who are listening, if you really do want to make a lot of money, you do have to spend time, and it can be on just one stock. It can be on just one company. But you do also have to understand that there's going to be risks involved. Give yourself a time window for it to work out and make it a decent long amount of time window. But in the same instance, you're still going to have your stop, because you can, if you lose small, you can invest $1 million into a trade and still lose relatively small. One R.
Yep.
Right. 1% would be $10,000. So you can still invest a lot of money on a trade, have a nice stop, or you can invest a small amount of money. And if it's not the end of the world for you, so for example, if you find a company and you have $3,000 and you want to invest in that particular company, just do a little bit of research, figure out how they make money, and throw it in there.
Yeah, and to your point, I mean, there's always opportunities out there. I mean,
Tons.
The one that I'm still kicking myself on is Amazon. When I started trading in 2012, I think it was around 350, and I was looking at it, but I thought 350 was expensive, and I was like, I can't pay 350 for this stock.
Yeah.
And then each time I was like, okay, I need to get in, and the next thing you know, now it's 1,600. So so there's always those scenarios. It just depends on what the company is and if you've done your homework. But it's that mentality. I felt like Amazon at the time, couldn't go much higher. It was like, man, this is extended, and now it just keeps going. And so it's just changed the way I look at it. So
that's the fun one, man. So tell me your takeaway on this one. It can't go any higher.
It can always go higher.
That's right. It can always go higher. There's nothing stopping something from going higher. That's the thing. Is people will sell, and like this move on Amazon. I mean, this is a huge retracement.
Yep.
Let me do it in a different color. So this is a massive retracement. But again, at the same time, if you're a trader and you got in at 2015 at 200 or whatever this is, 320, and it was 680, you don't mind holding back for it to pull back to 400, 500 because you're still profitable. And of course, you can do things like collar strategies, protective puts. There are absolute ways to hedge that downside. But something to keep in mind, folks, if you're thinking if you're in a stock and you're looking at that trend and you're up nicely and you're like, there's no way it can go higher. It can go higher.
And to that pullback, I remember this specifically because I was like, should I get in now?
This one right here?
Yeah. And, until you mentioned it, it's uncomfortable. Usually there was news and stuff that's making it go down.
Yeah.
And I'm like, I don't want to buy here. It can go lower. And I sat there and watch it go up again. And so, I've had a couple of those opportunities, but that's where the buying opportunities, that uncomfortable point that, and knowing that now, I'd be more comfortable.
Sure.
If I'm, looking at the charts, I feel like this is good support.
Sure.
Getting in. So, and the fundamentals and everything. But I will say, The only thing I do the fundamentals on are longer term. I don't do them on just the swing trades and stuff.
So what is it that you look for fundamentals? You mentioned earnings growing quarter over quarter.
Yeah, the main ones are the sales and earnings are what I'm looking at. I want to make sure that the sales are growing and the earnings are growing, and usually, I'm looking for 20% growth, quarter over quarter kind of things, just showing that the company's growing. If they're growing their earnings, they're growing their sales, they're in a market that's growing, it's going to continue growing.
Yeah.
So I just want to.
For long term, does it have to pay dividends for you, or not necessarily?
Not necessarily, no. If it pays dividends, it's nice, but it doesn't have to.
Because NVIDIA's dividends are small, but they pay them at least. That's
right.
Nice. Yeah.
But yeah, but the thing is with dividends is it's hard to find good growth companies that pay dividends.
Sure.
Most of them don't pay dividends if they're growth companies.
Exactly. Is there any companies that you got your eyes on right now? Anything longer term?
No, I mean I liked Shopify. I've been watching that one. And I was looking at it at 100, and I know Matt DeLong likes Shopify.
Yeah.
But I haven't got in that one. But my wife, we started a business, so when we were looking at some of the point of sale systems, just different things, everybody we were talking to were using Shopify or going to Shopify.
Yeah.
So I felt like that was a company that could do very well. So that's one I've looked at. I mean, longer term, I definitely like Southwest Airlines now that's been coming down. That one does pay a dividend. So I've been watching that one. I think it's at a pretty good support right now.
Mm-hmm.
So, but no, nothing in particular.
Nothing too wild.
No.
Gotcha. What's your thoughts on, what stock do you think would pay dividends first, Amazon or Netflix, or will they always continue to not pay dividends?
No, I'll say Amazon will probably pay dividends at some point. It's so big that, it'll continue growing, but I think it'll start paying dividends, before Netflix.
Amazon is a massive monster.
It's a beast.
Yeah, it is a massive monster. Just slowly and constantly crushing it. Crushing. This is a fun stock to back trade, by the way. Amazon's really, really fun because that's again one of those things where if you're in a move like this and you're thinking to yourself, man, there's no way it's going to go higher. That move by itself was just cataclysmically profitable. But that was also January 2018. Everybody was making money in January, and you had that very nice flash, that very nice pullback. What strategy, David, do you use right now for your trading? Your shorter term trading.
So my short-term trading, the main thing I do are swing trades, and then I do a lot of put sells and then covered calls. And I do put sells typically on stocks I don't mind owning. Some of those I like to pay dividends, especially if I'm going to hold them for several months, writing calls. But it depends on the premium. Usually you don't get as much premium for the ones that pay dividends. So
Sure.
So you got to kind of weigh that. Do you want to do it without dividends or not? But those are my three strategies really that I do: is swing trading, put sells, and then covered calls if it gets put to me. So, and I would say the put sells and the covered calls are consistent every single month. There's very few that go against me, and I make money on those. It's just smaller.
Sure. So for example, you say something like goes against you. Like if it's a covered call, how does a covered call go against, or would it go against you?
Well, covered call, I'm okay if it at that point it's something I'm ready to sell, and if it gets called out at that price, I'm willing to sell it at that price. But the put sells, I had one that was in a pharmaceutical company that got put to me. But then it gapped down. It gapped down when it got put to me, and it was so far below where it got put to me that even writing calls, I wrote calls for several months.
What stock was that?
Endo Pharmaceutical, ENDO. and it didn't pay dividends. And it got put to me, and I thought, okay, it'll come back. I'll just, write the calls on it. So every month I was writing calls below, the strike price that it got put to me. But it was higher than, where the stock was. So I was making a little bit of money. And then it, gapped down again. And so I finally just took my loss on it.
What's that ticker?
EN, I said DO, but it's DP, I think.
DP.
Yeah, sorry.
No, it's okay. No worries. So let's see what this thing's done.
And this was back in 2000, I think, 16. It was.
Oh, this is a while ago.
Yeah, it got put to me at 25. And
you got wrecked right there.
Oh, yeah. Hey, I got to admit the loss.
You got to admit the loss.
And so once it got put to me, I was like.
But this is before real life trading.
Right.
Okay.
Right. And
I want everyone to know that.
And and that's where I thought I could just write calls on it.
Yeah.
And it would come back. This is that situation where you're hoping, it'll come back.
Yeah.
Surely it'll come back. And,
sure.
So I wrote calls. For several months, just, writing calls every month. And then, it went against me again. And I think it was probably,
right here,
some drop again.
Yeah.
And that's where I just ended up getting out because
cutting the loss.
Yeah, I just cut the loss.
Are you glad you did it?
Oh yeah.
$6.41.
Now it's like $6.
What does this company do?
It was in the pharmaceutical business, and they had the generic drugs and all that. But
is it like TEVA?
Yep. And so it was one of those that, honestly, the only reason I did it was it. And I learned this too. When it's too good to be true, it usually is.
Yeah.
The premium was paying 6% when I got it.
Wow.
And it was like, wow, this is great. And looking at the stock, it was fairly inexpensive. And looking at where it had come from, I thought, hey, I'm okay at, 25.
Sure.
It'll go back up. And yeah, it gapped down, I think, on that gap from 25 down to like 15 or 16.
Man.
And there's nothing you can do at that point. It got put to me at 25.
Yeah.
And then wrote some calls. And there was a time I could have gotten out pretty close to the point that I bought in, but I kept holding, and the next thing you know, it gapped again. So
what do you think about it down here? Is it worth it? Am I seeing too many things, or?
I mean, it looks like it's at a very key support. And, at this point, you could play at absolute zero, and it's but yeah, I mean, the company's been around for a long time. I'd have to do a little more research now because it's been a while, but at this price, I mean, I think it's definitely a good price to, buy a few shares if you wanted it, or do another put sell down there.
Possible absolute zero. That's going to be an interesting play. What does it say? Please select English as a language to post your idea. Where do I do that? This is new. Please select English as your language. I don't know what that means. I'll still see if I can post this. If I can't, that's chart patterns. We'll see. Sorry, I'm saving this one for me because I want to do some. I mean, you're gonna do some research on that this week.
Yeah, no, it's
dude, $6.42 a share. I mean, you can buy a share or two.
I can make it back.
That's what I'm saying. Yeah.
So and I will say, usually when I take a loss, some people like to go back and get their money back from that stock. I try to just move on.
Right.
And okay, I took the loss and I'm out of it. And so then, since then I haven't really looked at it, but yeah, at $6 and looking back, at the support, it's a pretty good area. So.
Yeah. I got a buddy who always, so I think I've told you the strategy. He lives in North Carolina, and he was a pharmaceutical salesman for a while. He will buy any pharmaceutical as soon as it goes below $5.
Okay. And
his risk is 10,000. So he buys 2,000 shares. And if it goes to zero, he loses 10 grand. Okay. That's all he does.
Wow. How's he doing with it?
Real well. I forget his most recent. I can't remember. It's AREA, ACNA. It's like this recent pharmaceutical that just popped down there. It's not Acacia. I can't remember. Anyway, he's done really well, man. Because you'll find a random company like this that I've never heard of, he's never heard of, and it'll just pop below 5. Because all it can do is go to 0 at that point. And that's how he mitigates his risk. But it can go up to 100.
Yes, exactly.
And
this was a very volatile stock, and if you look back, it looked like, it come from, I think 190, somewhere in there.
Yeah.
It was, up there previously. So,
now, is this a pharmaceutical LCI?
Correct. Yes.
Okay.
Yeah, that's the one I was mentioning that some guys at work have been playing.
Right.
So it's very volatile as well.
Which I'd have to ask him. His name is Michael. I'd have to ask him if he ever bought this one. But this one gets down below $5. 2005. I don't know when he ever bought this one, but I think he could have bought this one in 2012 for $4 a share, and then it went up to 60. I mean,
wow.
And so I don't know actually. If you're out there listening, I don't know when he sells it. That I don't know. I text him really quick. I don't know if he sells it like 200, 300, 400%. I'm really not sure, but maybe just trails the stop. But I mean, that's it. That's the market rewarding specialist. It can be something super simple that people they know something. They know an industry. They know the chart. They know the risk. And if you know those things, you can do pretty well.
Yeah, exactly. And so the thing I would say with Endo was it went against the plan I had, the way that I learned how to do puts and covered calls.
Yep.
That wouldn't have been a stock that the guy that taught me would have done. But I got sucked in based on the premium, and it was I learned based on regression channels, and it was at the second deviation.
Sure.
2 standard deviations below.
Sure.
And it was at the line, and I was like, it's good premium. When the others are paying 2 or 3%, I was like, okay, I'm getting 6%.
Right.
And at the time, it looked like, okay, there's no way it can go down that far.
Yeah.
But yeah, it's just when you think it can't go that far, it can go lower.
When it can't go that low, it can't go that high.
Exactly. So. But that would be what I would say the takeaway was the guy that taught me the put sells and the covered calls, that strategy, he would have never even considered that stock.
Sure.
And so that was one of those, slap my hand, I broke the plan, but I didn't have a set plan like I do now.
Yeah.
And so that would be a takeaway.
What's your punishment for your pain if you break your plan now? I forget.
That's something we need to talk about. I've learned.
That's fair. Okay.
I feel like I do pretty well now sticking to the plan. Once you lose.
You do. I will say that. You do follow your plan. That's why I haven't actually asked, because you followed it.
I mean, once you've gone through 2 accounts, and then like this example here that I'm showing you, once you lose enough money, it's like, okay, I'm sticking to
You'll do anything.
Yes.
Yeah.
So, but I'm sure we could come up with some kind of food or, give me, 200 burpees I have to do in a certain time period.
This will be fun.
Be hating life. So,
well, guys, this is going to be fun. Me and David are chatting about that today. But he has done a fantastic job of following his plan. And, that's another reason I'm down here is because I told David that when he was chatting about doing like in-person coaching and getting me down here, we were saying, is he going to come to Nashville? Am I going to come to Houston? I've never been to Houston, so we kind of made the decision that way. But in the same instance, I mentioned that because he followed the plan, because he went through all those rules, that's why I was like, okay, this is going to be worth it for you. Because if someone has a really, really hard time in discipline, it's not going to be just trading that's going to be a challenge. It's going to be just about anything. So keep it up, man. Proud of you, brother.
Well, thank you.
Excited about the next few days together. And
absolutely. Thank you.
Oh, man, my pleasure. And for those traders who were here, thanks so much for being here. It was a little bit of an interesting day, to say the least. Nice little pop. We didn't take any trades today, didn't lose anything, didn't win anything. Did close a swing trade. SPY still crushing it, and we're excited to see how it kind of continues higher. Neil said he enjoyed it. If you guys have any questions for David, let me know, because we'll still be here for a few more minutes. But for those listening to the recording, thanks so much for being here. The only trade I had, as you all know, is we exited out of the AAOI swing trade that just cranked it out today. Marcia says, thanks, David. Marcia, I get to see you tomorrow. I hope you are ready for this, because I've been looking forward to it for weeks now. It's going to be a good time. I'm really, really pumped. All right, well, folks from around the world, thanks so much for tuning in. You are amazing, incredible individuals. It's been a stupendous Wednesday. I'm going to be back from 5 to 6 p.m. Eastern Standard Time for Energy Wednesday. And for those who are live, here live, thanks so much for tuning in. If you have any questions, let me know. I'll see you all tomorrow and this afternoon for the Free Stock Review. You guys are amazing. Love life, live life, and trade it. You all rock. Bye-bye.